Love is in the air because it is Valentine's Day weekend, and there's nothing I love more than talking about market dynamics and what's happening in the Boise housing market. Check out this week's video for Market Watch to find out more. Hi everyone, it's Joshua Barks here, an associate broker with Keller Williams Realty Boise and the Barks & Co. Real Estate team. Thank you so much for tuning into this week's segment of Market Watch. We are going to be covering the market dynamics for Ada County's existing homes. So the resale side, not talking about new construction in the Boise area. Now, last week, I know I was saying that we would have Canyon County for you this week as well, but when I got those reports, they were still incorrect, so that'll just have to be a later video. That'll happen at a later date. As soon as I have the most updated information, I will make sure that you get it. Now, I do want to hit some bullet points for those of you that don't want to stick around for our 20-minute video going over the nitty-gritty details of everything that's happening in the market. Even though I love details, so I'll just give you a couple of bullet points so you can watch this, move on with your life. First, we have inventory finally coming up month over month for the first time in 9 months. So since last April, we've been steadily declining in inventory and we've hit our floor at 85 listings available on the market in the entire Ada County. Now we are up to 114. Woohoo! We've come up slightly since then as well. We're actually at 130 something, but as the time of this report, it was 114. Now, we really had nowhere to go but up in inventory, so that is what we were expecting to happen. And as we get into spring and the weather starts warming up, social distancing restrictions start loosening, and the vaccine becomes more widely available, and all of those great things as well, we're likely going to continue to see inventory rise. That's at least what we're hoping is going to happen. So inventory is coming up. We still need significantly more because we are down by 70% from what we saw this time last year. And we were complaining about low inventory then. If you go back and look at our materials we were putting out then, we were complaining about low inventory then, and we're 70% less, fewer homes than what we had then. Okay, bullet point number 2, average sales price. We are appreciating very aggressively again this year. Last year, we rounded out with an 18% increase in the average sales price in Ada County. Right now, in 1 month, we came up 1.5% with a new average sales price of $433,000. Our projection for that going into the year, we were saying we were going to have 10% increase by the end of the year and a 5% increase by the end of May. Our new projection, because we're continuing to appreciate so aggressively, is we are likely going to see an at least 12% by the end of the year, maybe even up to 15% for average sales price appreciation. And I would say we're going to be no less than 7% by the end of May, just because we are really propped up with these numbers to have a very strong spring market ahead of us. Interest rates is our third thing, and with interest rates, they actually have remained flat and are projected to continue to be relatively low throughout the year with modest increases. Now, we will likely stay below 4%. In fact, I would venture a guess to say our ceiling by the end of the year is going to be no higher than 3.5%. Of course, interest rate projections are not exactly my purview. That's better in the lending industry than my aspect. But from what I've been told and what I've been able to research myself on interest rates, we are expected to see those go up slightly, but are likely going to stay relatively low. In fact, we're still below 3% right now for a 30-year fixed, which is incredible. Fourth thing and last thing before I get right into the video is, because our market is so volatile right now, and because we have so many buyers and not enough sellers, we are still experiencing a lot of competition. So if you're a buyer right now, make sure you hire an agent that knows what they're doing. It is so important. It's actually never been more important than it is right now to have an agent that understands how to navigate multiple offers so that your offer is considered and so that your offer wins. We don't want you putting in 20, 30 offers and still not being able to buy a house. So make sure you have an agent that either has somebody with them that works side by side that knows what to do in order to get your offer in front of the seller to make it appealing, or hire somebody like me that knows already what to do and has those relationships with the agents that you need to have in order to get that going. And then on the flip side of that, for sellers, make sure you have an agent that, again, knows how to navigate multiple offers so that as a seller, you can get the highest and best dollar for your home. Because you don't want an agent, especially in a market that's competitive, that's just going to say, oh, just take the first one. The first one's the best one. Let's just get it, tie it up, and sell it and move on, because that's terrible advice. Most of the time, your best offer isn't necessarily going to be the first offer you receive. It's going to be the offers that you receive with the right market exposure. So as long as you're priced correctly and you're marketed well, within those first couple days, you'll know what your highest and best is going to be. But you have to wait a couple of days to give people the opportunity to actually see your property. That is more frustrating now and last year than it's ever been, where you have a home that hits the market at noon and then is pending by 4. Like, what kind of disservice are you doing to your seller by having your house go pending after just a few hours? Maybe I had a buyer, maybe, so many agents had buyers that were lined up to see it and they didn't even get the chance because it was already gone. So make sure you have an agent that knows how to navigate multiple offers, knows how to negotiate on your behalf as well as a seller, and then can really just, I'm very passionate about this, so I apologize, really just knows what to do in order to make your house outshine the competition so that you get even more multiple offers than you would otherwise. Okay, I'll get off my pedestal, my soapbox right now, and we will just dive right into those market dynamics for January, and I hope you enjoy. Here we are with the January market dynamics for the existing home sales and everything that's going on the first month of the year. In the Boise area, we're talking about Ada County in this video, so we'll just dive right into those market trends so you can keep an eye on what's going on out there. If you have seen any of our other deep dives, you'll know that I love to start with this market trends chart because it gives us a great overview of just the basics of what's happening in the market for supply and demand. So it's a 13-month rolling chart here. So you can see what's happening this year, so January 2021 versus January of last year. And it covers the closed, pending, and active listings that are on the market. And so the biggest thing that I can see here is finally inventory has come up month over month. We had a floor of 85 back in December, and we have finally increased to this 114 that we saw early February. Live data active right now, we would have about 130 or so. So just a few more than we had at the beginning of the month. But it is the first time inventory has come up since last April. So we were declining all the way down to 85. And I mean, you would think that we'd start coming up, and my projection is we'll continue to come up because there's really nowhere to go but up. However, we did say that this same time last year when we were complaining about the low inventory of 374 homes on the market, and we ended up declining into February, which is interesting because typically we have our lowest inventory months in both December and January, and then we steadily start increasing on inventory into the springtime, and then kind of plateau in the summer months, and then have a little dip in the fall, and then low again in the winter. So when you're looking at this also, one thing that's kind of interesting is we have 365 closed sales and 409 that were pending in January of this year, whereas last January we had 477 closings and 524 pending. Now, the biggest difference, apart from being down year over year, is we don't have enough homes to satisfy demand. So our closed sales and pending sales are going to be less than what we saw last year. Because if you were with us throughout the summer, we were vastly over closed sales, we were up. Pending sales, we were up compared to what we saw in 2019. So this is actually the first time since that frenzy of being more sales, more pendings with less inventory that we've seen since all of this craziness started. So it's kind of interesting to see that finally inventory taking effect on that number of closed sales and pendings, because we don't have enough to satisfy demand. And that's likely going to continue into the future, because I don't see a wave of new listings hitting the market here locally anytime soon, which is going to have a pressure on prices here. So as you can see, we rounded out the year last year with a 17.9% increase in the average sales price from $362,000 in 2019 up to $427,000 in 2020. So far this year, though, in 1 month, we've already come up 1.5%, which is incredibly aggressive, especially because having that lack of inventory and people having to fight to get into homes, that's driving prices higher and higher. And while interest rates are staying low, that's going to continue to buoy that as affordability is still high. And then with this 1.5% appreciation right now, my prediction of having a 5% increase by the end of May is actually probably too conservative. Now I would estimate we're likely going to see somewhere close to maybe 7 or 8% by the end of May when summer starts, if we continue on the same pace. And by the end of the year, my prediction a month ago was we were going to start to cool down a little bit as more and more listings came on the market after the holidays. Well, the number of listings is still not quite caught up to demand. In fact, even if our number of listings doubled and then our buyers halved, we would still not be in a balanced market. It would still be an incredibly strong seller's market. So we don't really have anything to worry about there. So 10% by the end of the year is going to be a cakewalk, most likely. We are almost certainly going to see somewhere closer to maybe 13%, maybe even as much as 15 or 16%. Though once we start leveling off with inventory levels and demand, we may go back down to this average of 11.5% a year, which will be really helpful. I can't wait for that to actually happen, where things start to slow down just a little bit and we can move on from the craziness. Because as you can see, across all price points right now, inventory, having just 100 homes on the market, we have less than a month's supply on all price points up to $1 million, where we have 1 month. Average days on market across all price points is 16 days. And see this 0.1, 0.1, 0.1, 0.2, we have barely a week supply in some of these price points. And in some price points, we have zero supply. Zero, there just aren't any. So with that, the average asking price being $657,000, with the average pending or listing being marked pending at 512, with 433, we still have a lot of room to grow as far as appreciation goes, because this is what sellers are getting on a 12-month rolling scale. These are the listings that are pending right now, and then this is what sellers are asking right now. So you can kind of see that the pressure is still on an upward trend. When you're looking at inventory levels, if you haven't seen any of my other videos, economists say between 4 and 6 months supply is considered balanced. Anything fewer than 4 months is considered a seller's market, and anything beyond 6 months is considered a buyer's market, because if you have more than 6 months supply, buyers have more choices. And if you have fewer than 4 months supply, buyers have less choices. So therefore, it becomes a seller's market. Now, when we're looking at the overall piece here, we can see everything all together. As I said, inventory is still projected to continue to rise. Like I said, we have 130 some odd homes on the market right now, and this 114 being the first time we've finally come up month over month in inventory. I hope to continue to see that trend and trend upwards into the spring. And then when we go with the 1.5% appreciation, when you're thinking about buying, waiting is killing us, because while we're fighting for what little is out there, and yes, there will be more options in the spring, most likely, but prices are also continuing to appreciate at a very aggressive pace. So waiting can cost you a little bit there, because even if you were just to buy something in December versus January, on average, now that same house costs 1.5% more than it did just by waiting a month. So if you're thinking about buying, make sure you get your ducks in the row as soon as possible, so that if you're ready to buy and it makes sense for you, you can jump on it. And make sure you have an agent that knows how to win in multiple offer situations and knows how to navigate that, because otherwise you'll be, on your 20th offer and have gotten nowhere with that. And that's really, really difficult for people out there if they don't have an agent that knows what they're doing. So with interest rates, like I said, they are projected to rise, but they remain flat again for the second consecutive week at 2.73 for the 30-year fixed rate mortgage, according to Freddie Mac. And like I said, we're likely going to see that continue to rise steadily through the end of the year, though I do know that the Fed wants to keep rates relatively low as the economy continues to recover overall. So when we're talking about my predictions, inventory again will start to slowly rise as the vaccine becomes more widely available, guidelines for social distancing begin to loosen, and we can finally put the pandemic behind us. So as we get into spring and the weather starts warming up and people are more comfortable with strangers in their home, we will start to see that inventory number come up. Interest rates, like I just said, they will start to rise, though not by much, and they're likely still going to be less than 4% by the end of the year. My guess would be that they would still be under 3.5%. Maybe that would be where we max out by the end of this year. With our market locally, a lot of people are asking me, with everything going on nationally and the moratorium ending and things like that, are we going to see a market crash? Well, we might see something like that on a national level, but we have a huge amount of in-migration from other states. So until those markets start to dry up and slow down, our market will continue to be propped up by the demand throughout the Treasure Valley and other affordable cities around the nation from those high dollar areas that are moving in. This is what we saw back in 2006, 7, and 8. Everyone was like, oh my goodness, everything's happening in California. Oh, but it won't happen here. And what happened? Well, it did come here. It was just much later. So we like to look at what's happening in the West Coast and the East Coast and those other feeder markets to find out what's going to happen here eventually, because a large factor in our market is those other areas. And right now we are still seeing in-migration in droves. And you would think something like a pandemic would slow that down, but it's actually made it more drastic than it was before. Prices with that, because not only are locals battling for the little inventory that we have those out-of-state folks and the people out of area continuing to battle for the little inventory we have. So prices will continue to rise, likely not at the same levels we saw in 2020 with another 18% by the end of the year, but it will be close. Like I said, we're projecting at least 10% by the end of 2020 and at least 5% by this summer. In fact, I would venture to say we're likely going to see a percentage of maybe even 15% by the end of the year and maybe even 8% by the end of May. Our local market is going to remain very competitive, buyers, especially on entry-level homes. So make sure you have your ducks in a row and hire somebody that knows how to win. It's never been a more important time than now to have an agent that knows how to navigate the market. Sellers also will continue to experience a very strong selling market, often selling with over asking with multiple offers, as long as you're priced correctly and marketed well. Make sure you have an agent that knows, again, how to handle multiple offers on the negotiating side. So as a seller, you're set up for success, and make sure that your home stands out from others so that buyers are fighting for your home. Your home is the best home out of the 100 that are on the market currently. So If you don't do that, you might just have an agent that says, oh, take the first offer you get because that's the best one, because they want to wrap it up and get it done quickly, and you'll end up losing money, and we don't want that to happen. So if you have any questions about buying, selling, or investing in real estate, please reach out. If you're thinking about timing the market, there really isn't a good time to buy or sell, because it comes down to you and your needs. Do you have a good enough reason to move, and can you afford it? Because it's always a good time to buy, because we know historically real estate goes up at a 3 to 4% average year over year for the long term. So it really depends on what your goals are. There's never a bad time to buy, just sometimes not a great time to sell. Because with the housing market crash that we saw in 2008, if you were not trying to move, if you were not trying to sell your house, you're fine. And if you ended up selling a few years later, you were covered from that as well, especially if you've had something since then. So if you have any questions, just let us know. That's what we're here for. We're always happy to help. There's no obligation, just to answer your questions. I'm happy to give any information we can to help make your decision-making process and just the idea of navigating this crazy market better. My number is 208-914-1095, or feel free to email me or visit our website for more information. And until next time, I hope you take care. All right, so there you have it. Everything that's happened in January for the Boise area. Again, if you have any questions, or if you're considering buying, selling, or investing in real estate in the near future, I'd love to be interviewed. I'm here to help. Even if you maybe just have a question, let me know. My number is 208-914-1095. Feel free to call or text. And then, of course, you can always visit our website or email me. My email's at the bottom of the screen as well. All right, well, happy Valentine's Day weekend. President's Day is Monday, so happy 3-day weekend to people as well. And I will see you next Friday.